Hello everyone, this is Abhishek and I welcome you all again to Strategic Stocks. Well, this video is about the consolidation pattern breakout, and this is the breakout strategy on swing trading. Basically, I have already provided a screener for this. If you have not seen that video, you can watch it later. Here is the link for the video. And this screener scans the stocks which are in consolidation. As you can see, this stock is in consolidation, and whenever it is trying to break from the consolidation zone, there is a good movement in the stock, and we'll try to capture these movements. And for that very reason, I've already provided this strategy in Hindi, so this time I'm providing you in English. So before coming to the rules of the strategy, let me show you the screener. Well, if you're new to our channel, we have provided a lot of screeners and indicators basically on TradingView. As you can see in this example, this is the consolidation scanner, and what it does is it tells you about the stocks which are in the consolidation range. The settings for this is completely user dependent. So what you have to change the percentage consolidation range and the number of bars for consolidation. These are the two settings that needs to be done from you. I'll let you know the settings for these two values. So whenever the stock is in consolidation, the screener will scan the stock and you can take entry, and the entry criteria is for time 3:20 p.m. to 3:30 p.m. and that is a very comfortable time for everyone. Even the office going persons can also execute this strategy. So you need to enter the stock only in this time frame at the end of the market. The entry will be based on the scanning of the stock. It should be in breakout, and I will talk about the rules of the strategy after the backtesting. Basically the time frame is 1 day daily time frame. So let us first do the backtesting and then we'll come to this. So this is a consolidation breakout strategy. First of all, I'll show you the settings. The trading range period is 25 and the maximum range band is 4.5%. These are the settings that needs to be done. That means the stock should consolidate for 25 days in a percentage band of 4.5%. So with these settings, let us backtest the system. We are trading only in future and options, and the time frame is daily. Let us take a capital of let's say 1 lakh, and let's take it 10 lakhs, and long and shorts, let's take this commission and margin. This is the amount that will go to the brokerage and the slippages, and we are not taking any account margin. That means we are not taking any leverages. So this is the AMI broker software, and we are backtesting on this. This is so let us see the results. These are my results, and you can see the accuracy and the returns of the strategy. The annual returns is 58%, and look at the accuracy. The accuracy is 62%, and against this accuracy, what is the risk is to reward ratio? The profit is average profit. Whenever you are in profit, the average profit is 4.34%, and the average loss is minus 2.33%. That means the risk is to reward ratio is pretty good, plus the accuracy is good. So it is a very powerful strategy. Also, we want to see the drawdown. Drawdown is the risk, basically the maximum risk at any given time in this last 5 years. We have done the backtesting for 5 years, and The maximum drawdown is only 16%. That means 16 to 70%. That means at any given time in this strategy, the maximum risk was 17%. So it is a very good strategy. Let us also check the equity curve of the strategy. This is basically the equity curve. By the way, if you are confused about these parameters, you can check this link. This is the link for understanding the backtesting report. And I believe that every trader should know what are these parameters. What is the drawdown? What is the annual returns, CAGR, exposure, and everything. This is the equity curve. That is, you're starting with 1 million, and at the end of 5 years, the capital grows to close to 10 millions. There are phases when this strategy has been in drawdown. You can see if anyone has started trading at this phase, and for the next 2 months there is complete drawdown phase in the market. You can also check this the same here. So there's a drawdown phase of 16% in 2019, and you can also see that in this strategy, because it is a consolidation strategy, there is no trade from 2020 to mid of 2020. This was the phase when the market was very volatile and there was no consolidation at all. Also, we can check the monthly report. This is the month-wise breakup of the profit and loss. You can see there are months with continuous loss and there are months with no trade, and also there are months with continuous profit. So since the drawdown is pretty less, so we can also trade in future and options. I will not recommend options buying with this. I'll only recommend futures. So let's take the account margin of 50. That means you are using the leverages. That means if you have 5 lakhs of capital, you can trade with 10 lakhs of traded value. That means double of your capital size. So with this account margin, let us backtest the system. So this is the backtest for 2x of leverages. That means you are using twice the leverage. So the annual return is 139%. That is a very pretty number. And the drawdown is 30%. So if this is within your trading zone, trading psychology, you can trade with 2x of the margin. So it is a pretty good strategy. So what are the rules of the strategy? Let us come to the rules of the strategy. So what are the rules of the strategy? First of all, time frame is daily. Then entry time is close of the market, that is 3:20 p.m. to 3:30 p.m. Then what about the exits? The profit should be more than 3.5% at the end of the day. That means there is no fixed exit criteria. Each day you have to check whether the profit in an open trade is more than 3.5% at the end of the day. So exit is also at the time of end of market, that is from 3:20 to 3:30 p.m. Right? And the stop loss should be more than 1.5% at any given day to exit the strategy. That means at any time, that is, let's say at 10 a.m. if your loss is more than 1.5%, you need not exit the strategy. You will wait for the day, you will wait for the closing of the day, and you will only exit in the time frame of 3:20 to 3:30. So stop loss criteria is if your loss is more than 1.5% at the end of the day, you will exit that strategy. Also, the fourth rule is that maximum holding days is 15. If these two exit criteria are not met, then you need to exit the strategy after 15 work days, that is 15 trading days. So these are the rules of the strategy. You can also trade with equity, that is cash market. You can also trade in futures with this, but I will not recommend this for options. So these were the rules of the strategy. As you can see, the profit is more than 3.5% most of the times. If the profit is less than 3.5%, that means the holding time is more than 15 days and the exit criteria is not met, and the loss is more than 1.5%. As you can see, the losses are more than 1.5%. If you want to check our strategies, you can follow this link. We have back tested many strategies here. Thank you everyone. That's it for today. Take care. Tata. Bye bye.